Good morning, good morning. Welcome to the tradingsyndicate.org. I'm JJ, and I am your ringleader for the circus this morning. Good morning, Owen, Travis, Kevin, how's Cape Cod? Hey, Raj. Sadiq, what's up? How you doing? Hey, Colin, good morning. Thanks for sending that info. Hey, Shanghai, how are you? Well, folks, here we go again. Hey, Doc, you want action? Well, here we are again. Another all-time high. Alexander, how you doing? Hey, Jiraj. What's up, Jerry? Okay, and welcome to all the folks joining us on YouTube this morning. Thanks for joining us. What's up, Hank? Hey, Roman, good morning. Everyone is thinking short, right? Overnight inventory is quite long. It's at least 75% long. And exactly, price discovery, right? So overnight inventory, folks, is long, as at least 70%, maybe even more, of the volume and time, well, volume, not time, has been spent above yesterday's close. Now, if we opened up here at 64.87, we're going to open on a gap. Is it too much to ask for in the next 25 minutes? If we get some liquidation? What do you think? It's happened. It's happened. Not all the time, but let's see. So, opening on a gap means change. Right. I was joking around. I was joking around. So if we open on a gap, the first order of business will be to try and close that gap. And the emphasis is on try. Okay? Now, for those of you who are brought up in the all gaps fill school of thought, there is a big if. Gaps will fill if the order flow supports that theory. So if you have a big gap up, a double-digit gap, and the sellers who are basically net long, underneath yesterday's high, right? The longer-term size sellers are net long. What motivation do they have to lower price if people are lining up to buy? Right? So say you're selling You know, if you're selling water and it's, you know, 40 degrees Celsius outside, and you got hundreds of people lining up, you might be selling $1 bottle of water for $5. You know? So sellers need to be motivated to move price down. And what motivates a seller to move price down? Competition. That's what motivates a seller to move price down. Nothing else. Lack of buyers and competition. Hey, Moran. How are you this afternoon? Right? So the sellers need competition amongst themselves. And, you know, folks, you have to think about it this way. The entire inventory of the whole S&P 500, lifetime inventory, is underneath us. Right? That's significant. Right? Yeah, we have a poor low in the overnight. Right? So what's up here? Is there any cost basis up here to sell into this? Does anybody own the S&P at 6,800? No, they don't. So there's no overhanging supply. And when there's no overhanging supply, and we're making new high, no, sellers will not run out of supply, my brother. Right? Because all of the supply, Kunj, is underneath us. Since when was the S&P 500 invented? Since inception, all of the supply is underneath current price. Right? That's why there's nothing for sale in Tuscany right now. Okay? As they said in Seinfeld. So, how do we deal with this? Well, for longer term traders, right? If you're looking for a short, well, you want to see a seller. Now, if you're trading, I don't know, $500 million, you can hold a short for some time and endure a bit of pain. But if you're just normal retail people like us, right, just normal eating, drinking people, you don't have $500 million, and you sure as heck don't have 20, 30, $40 million of capital to put towards a short. So let's just trade the thing, right? We are still in the front end of this move, ladies and gentlemen, right? Go look at the weekly chart. We are in the front end of the move. This is the front end of the move. This is the back end. This is the front end. This is the front end of the move. Right? You can't fight the market. You're going to get destroyed. Right? Exactly. So you buy the dips, you buy the retracement. You do it intelligently, you use the look below and fail. Right? So my balance levels this morning are 64 to 68.5. Double it to 77.5. Double it again to 64.95. Let's see what happens. I'm not a fortune teller. I'm not a predictor. I'm not Marvin the mind reader. So I have to, right? I don't know, Troy. And if I were you, Troy, I would not even look at that. You know what I mean? Here's the thing, Troy. There's a lot of data points. So you're asking, do 6,800 OTM options holders exert any influence? They may not. But how do you make money off of it? And how do you put that in an execution setup? You can't. So ditch it. Just take it and throw it away. Now you've got space in your head for more important stuff. What's more important? Well, let's see where the sellers are this morning. There is some selling, otherwise it would be a lot higher. Look, right there. Look at the tops of these candles here. Right? The sellers are here. Right? There's distribution. Okay? Focus on that. Okay? Where are the bids? Well, the bids are at the bottom of all these half-hour candles as this thing has been trending higher and higher. Now, everyone's looking for a blow-off top. When was the last time we've had a blow-off top? I don't remember. It's been a while. Why is that? Because markets are built differently than they are now. Yeah, exactly, Jeff. Right? Exactly. 2000. Markets are built differently. They don't need to blow off. They just need to correct and keep going back up. Now, in the trading room, in our trading syndicate trading room, I put in the video I did on why markets hit new highs after selling off. It's very, very simple. It's because they're structured to go higher. They're structured, and the law of the land is for people to hold stock and investment companies to hold stock for decades. They don't liquidate stock. They don't have to. Right? If they need money, they'll borrow against the stock, and they get a tax write-off. Right? Hey, Sonny, how are you? A blow-off top, Patty Lou, happens when human beings used to run the market. There would be a euphoria, and the market would hit a top, right? And there'd be a ton of selling, and it would like blow off, almost like a pot on the stove overflows. You know what I mean? You put water on a stove, it'll boil over. That's what a blow-off top is. It usually comes with a lot of volume, a lot of euphoria, right? Think, the market crash of 1929. Think the internet bubble, right? We don't have that anymore because the revenue generation model of U.S. capital markets is an asset gathering revenue generation model. We can't have a blow-up top because BlackRock cannot liquidate 900 million shares of Apple in a day or even a week. So it is impossible to blow this market off the top. It does correct, like when President Trump had his Judgment Day stuff, right? We had a massive liquidation. But all that did was it took out all the margin players and flushed them into hands of larger money. right? This is a margin event, right? And it resets the cost basis, and we're at new highs. So if you guys are interested, come into the room, check out the video, right? Blow off top means it goes up, and then it blows off and comes down. Think about like an oil well. You know those pictures of oil wells, Patty? You know when you get a gusher? The oil spurts up into the air and then falls to the ground, right? If that kind of helps you visualize. But that's not how markets are built anymore. Markets are built differently. And make no mistakes, markets are built. They don't just naturally occur. Okay? They are created and they are built by the smart money. Right? It's always the way it's been. It's always the way it will be. Okay? Does that help, Patty? Now, I had to do a podcast yesterday. Exactly, Patty. Exactly. Right. I had a podcast yesterday. I couldn't do a price action lab for you guys. Let me know if you're interested. I'll have one today for the folks in the coaching class. So, let's see if we can take out 64.85. We have good distribution in the overnight. Overnight POC is up at 64.81. Yeah, Hunter's he's a great podcast guest. Let's see. If there is an edge in long, can I buy a micro contract at some low price and try and hold it a couple of days with a stop loss before low some daily candle? I've heard some people doing it. I don't know how much success they've had, Omen. And what's the margin to hold a micro overnight? A couple of grand? I mean, people do swing trade. Yeah, I don't think you can hold overnight on those funded accounts. Yes, we do have single prints. Thanks, Sadiq. They're right there. It's our little short position. Whew, yesterday we opened at 64.23. Now we're going to open at 64.80 something. Unbelievable. Oh yeah, how do you like your new Tesla, Patty? That's good stuff. Just don't put the TPO charts on that big screen. No trading and driving. Well, I guess if you had a self-driving car, you could technically trade while the car did its thing. I don't know. My girlfriend's all excited about these self-driving cars. Yeah, I'm not so convinced, but we'll see. She might be right. So we've been in this little distribution balance now, ladies and gentlemen. Yeah, between 85 and a half and 88 for a little bit of time here. So the normal course of business is to correct inventory. When we're at new highs, it might take some time. Okay. Now the problem with opening on a historical all-time high is that the order flow is not reliable, right? Can get a little weird. So just be careful, right? I like to on days like this. What I like to do is like to see where the buyers and sellers are interacting before I come in and start making any decisions. You know, I like to see where the sellers are stepping in and where they stop selling before I just jump in there. Don't be in any rush, okay? Don't be in any rush. Nice and slow. I do look at market structure, Derek. That's why I was talking about the single prints and how the shorts are trapped here, right? Where the point of controls are, where the lower stops are. That's all market structure. When I make my trading decisions, I use the 1 minute candle chart. Now, I used to trade off of TPO up until about 2017, 2018. Why did I switch to candles? Because the TPO range is too big that you can manage risk. So if I went long here at 87, my stop would be 85. But sometimes your stop can be 20 or 30 points below you, which is absolutely useless, right? And a lot of TPO traders, and I'm being kind, are not profitable, okay? Or they're only profitable during certain types of price action, right? A 30-minute candle chart is a TPO chart. That's all it is. A TPO chart is just a fancy 30-minute chart. That's all. It's a it's just a candle chart with bells and whistles, right? What if you only trade one micro without a stop loss? Well, good luck, man. Hey, listen, it's your money. If you want to burn your own cash, go ahead. Right? I think trading without stops It's probably the stupidest thing I've ever heard of. I mean, if you're a retail trader and you work for a living and you earn your money, if you don't have a money tree in your backyard, or if your great-great-great-grandfather wasn't a Rockefeller, you know, regular people have to actually earn their money, Fred. So, I don't know. Maybe you're like a billionaire and you have more money than sense. Go ahead and trade without stops. But trading without stops is, in this market, is probably the dumbest thing you can do. And I can't believe people still think about doing it. What usually happens? I don't know. You blow up your account? I don't know. Hey, listen, man, you might be one of those guys who walks into a casino in Vegas, takes 100 grand out of your roll and puts it all on one thing, right? I don't know. You're on YouTube joining us. I have no idea who you are. You could be Elon Musk in disguise. You know? Trading without stops is just, well, it's not business. It's just degenerate gambling. You know? Stops are insurance on your account. They also give you information about the market. They also give you information about your trades. So I don't know why you would trade without them. Maybe bravado, ego, right? And you know what a big ego does in finance? It just gets you a ride on the bus and maybe a house made out of cardboard on the sidewalk. But hey, it's not my money. Let's see where we open this thing up. We're looking for 85.5 on the downside. On the upside, we'll use these levels, 91 and 95.5. Oh, that's cool, Patty. I did not know. I've never driven a Tesla. All right. Let us see. Just in case. Let's see what happens. Dangerously close to the overnight high. 9 seconds from the open. Just relax. Now, if you're not comfortable trading the open, let the large traders little short at 88 and 3/8. Can't cover at 87, so I had to flatten that. Try it again. Seven and a half. Going to cover one at 86.5. Cover the other one at 86 because I can't get filled at 85. Filling the single prints. So the trade I took was based off just inventory being long, down to the single prints. I had a bid in at 85 and I couldn't get filled, so I had to pay 85.25. Exactly. Trading without a stop loss is like having one of those expensive iPhones with no case protector. It's only a matter of time before you get butterfingers and drop the damn thing. I saw this video. Oh, okay. Watch out if we take out the overnight high. Be careful shorting, okay? I saw a video. It must have been fake. This guy dropped a Rolex into an animal enclosure with polar bears in it or something like that. Must have been a fake Rolex. I think anyone would be that nuts. If we stick over 90, just use the levels, folks. Just use the levels. Looking for 95 and a half. So we're in price exploration. So if you are going long, right, put some sell orders out because you really don't know where the heck the buying is going to end. This is unexplored territory. I took a little scalp long off the 91s and sold at 92 and a half. But just in and out. I'm scalping the micro, by the way. I'm not trading ES. Nice work, Omen. Now, we're going to backfill down to 90. When we get to 64.90, look to see if the market bids here. And my upper target, one of my upper targets is 65.07, which is on this chart here. 65.07 and 3/4. Point of controls up there. Good buying. Done for the day? Nice work. It's always nice to be done work quick, right? In, out, get paid. What's the business behind the red candle? Uh, in that opening auction, my friend, someone put some big sell orders in and knocked the thing down. It's called a shakeout. Yeah, exactly, Derek. That allowed them to get some cheap inventory underneath 88, which they're selling now at 91. More distribution up here between 91 and 93. Jerry, just, you know what, Jerry? You're back from a month of vacation. I would totally recommend that you just sit back and watch today and do not trade. right? Remember we spoke, you got in last night, you're tired, you got to deal with the kids, all that stuff. Just kind of chill. I'm looking for bids at 90. Let's see if we find some. Spend some time and kind of get to know the market because it's a month since you've traded. Just ease into it, nice and slow. Where are the sellers? Hey, Fisher, they're in the Hamptons. They're all at some eyes wide shut party that we didn't get invited to. Sorry, somebody was talking about that movie yesterday, so I had to incorporate it into a joke, right? Hey, Seeker, how are you? See you, Sadiq. Go have some curry for me. I'm not allowed to. I'm sure you're enjoying the food over there. A little back and forth here. Let's see if 95 and a half works. It's never been tested. It's never been traded. So, this is all exploration in reverse. Like when Elon gets into his rocket ship, we don't know what he's going to find up there. I still have no idea why anyone would want to go to Mars. There's 95 and a half. Do we get a reaction? It kind of went right through it, didn't it? Gonna wait till the next candle opens. Now, if the next candle opens under 95 and a half and you're inclined to do a look above and fail short, put your stop at the top of A. Don't waste too much money on a stop. Okay? So say you shorted 95. Put your stop up just at the top of A. And you're going to be looking to cover. This is called shorting the backfill, right? And the backfill should take us down to 93. If we can't get a 93 fill, grab the offer. Right? Do not wait for an invitation to cover in a market at all-time highs. Put a 93 bid in and see if you can get whacked. Right? It's a fast trade, but there's 93. Can we go 92 and 3/4? That'll guarantee a 93 fill. Eh. Now watch the next candle when it opens. If it can't get to the bottom of the previous candle, they're going to start lifting the offer. There's 93, quarter half, quarter 3/4, quarter half, 3/4, 3/4, 94. And this is the problem. That's the backfill. You had 1 minute to short. Right? You're okay in that short as long as we don't take 95 and a half. Right? If you're short under 95 and a half, 95 and a half is your warning. 96 is your hard out. And the offer is lifting. All-time highs are very hard to trade, right? Don't be upset if you're having trouble trading this. Just don't overcommit, okay? Take a couple of scalps. If you're not comfortable with it, you don't have to trade it. Remember, it is your money. You worked hard for it. Don't blow it all in one day. Yeah, there's nothing wrong with chilling out and letting the larger traders take the lead. Okay, we got a little bit of selling at 95. Let's see where they stop. This is not easy to trade. Yeah, exactly. Exactly, Nano. Right? There are definitely more favorable trading conditions. Since we are here every day, there is no need to do anything stupid. Right? Today's a lesson in intelligence, not patience. Be smart about it. When you tell people to be patient, they ignore you. If you tell people to be smart, then it hits their ego, and they might listen. Now, if we start getting over 95 and a half, watch your whiskers if you're a short seller. And if it does break out, we don't know the extent of the breakout. Right? See, they're hitting it right at the same high. Oof. Just let them do it. Oof. Let's see. This is choppy. Yep. If your short dock stops at that 97, 97.5. And here we go. I would not waste a lot of money shorting this thing. Looking for 6,500. What it's doing right now is it's just taking stops. That's what causes that jump and back down, jump and back down, buy-ins and stops. You're shorting all-time highs, so order flow is a little unpredictable. And what we are right now, this is price exploration, folks. Let's see if we find some sellers up at 6,500. Well, the thing is, Kunj, what is order flow? It's just the flow of customers, right? That's true. We have no idea what's going to come in the door, right? At 6,500, there could be a mess of people just waiting to pounce and sell, right? There could be a ton of people waiting to buy 6,500. They're not going to show their hand in an order book. That's for sure. So just watch the 1-minute chart and watch the offer. If you watch the offer, it'll tell you if the sellers have to lower price. If the sellers don't have to lower price, then you're all right with a short. I mean with a long, right? Sellers only lower price because they have to. That's why if you're shorting a market, you need to find a seller. There is a practical aspect to trading that people do not think about because they're trained to trade EMAs and indicators and all that stuff, but they leave out the practical aspect of business. So if price is going to get marked down, there has to be price competition amongst the people who own the product, and they will be forced to sell it at cheaper prices. Do you see that happening now? Right? No. So what is the point of shorting? When you see a seller, then by all means, right? Take a hit and run short. But I don't know why everybody wants to short all-time highs. It's like a sickness. Do I have any book recommendations? I used to have a ton of them, but honestly, if you want to learn how to trade, screen time. Spend some time watching. Books are great, but they don't help you with the practical aspects of trading, right? Like, I love books like Once in Golconda, Reminiscence of a Stock Operator, Inside Wall Street, William Worthington Fowler. Those books are all over 100 years old. Right? They're not going to help you trade, right? But they will help you understand the business a little bit. And I love Wall Street history. See, the thing is about this kind of market, this is what happens, right? Everybody looks at this market and goes, oh, it's too high for me to buy it, right? So how can I make money? I'll go short. Well, that's cool, but is there a seller? Right? What you want to really do is train yourself how to react. Like a pilot trains himself how to react when he hits turbulence. Right? So when you're in a trade, you're not fumbling around. Right? You know, books are great. You know, books are great. I have nothing. I mean, I've read all the trading books, so many of them, but none of them have actually really helped me make any money. Have a business set up, figure out the terms and conditions under which you do business, and when the market hits those conditions, right? Mark Douglas's stuff is really good. I love his video series on YouTube. I wish he was still with us. We've had his wife on our podcast, Confessions of a Market Maker. Right? I had no idea he was that superstitious, though. You know, he was driving to work. If he got 3 red lights in a row, he'd turn around and go back. That was pretty funny. I didn't know that. So a little backfill if you were short. I didn't call out the short. But so if you're short, I'd be looking for a break of 64.97. There's nothing wrong with trying to short the backfill, right? When you see sellers are in the market, you can sell short, put your stop here, and then bid the next level down. Finally, we got a decent red candle. Speaking of books, hey, I'm almost done writing my book, but it's not a trading book. It's just a book about my crazy, weird life and all the characters that were my clients. Look below and fail of 95.5. Try a little long here. See if we can tag into this price action. Right? So there's my setup. Look below 95.5. Fail, so we go long 96. Put our stop at the bottom of those candles. And I am going to get stopped out. I am stopped out in about 2 seconds here. I'm stopped out. I was too early. See you, Jerry. Have a good one. I won't go long again until we get over 96. It's a little choppy. Now I'm trading the micro. I'll try it again. 96 long on 2. Put a 97 and 3/4 sell order out. Out 1 at 97 and 3/4. Out 1 at 98 and 1/4. So it worked the second time. Right? Once again, that's my whole pet peeve is I'm always early. I'm early and I get stopped out, and I've learned how to take the trade again. Because as soon as I got into it, right? No, I went long this candle here, right? And got stopped out. I should have waited for that one. Are we in the back end of the move? No, this is an inventory correction, Patty Lou. Until we accept under 95, that's just a little flash sale. You know, like Walmart, attention Walmart shoppers, for the next 60 seconds, Jimmy Dean Franks are on sale. Get them while they're hot. And that brought buyers in. So if we accept under 94, then I could say we're in a bit of we might have a bigger correction. Let's try it now. What made me re-enter the trade after being stopped the first time? Experience. Because as soon as I took that trade, Jiraj, did you hear me say I might be early? I was aware that I was early when I was in the trade. Now, I could have been wrong twice in a row. It wouldn't be the first time, and it sure as heck won't be the last, right? I could have been wrong twice in a row, and that has definitely happened. But this candle didn't take the bottom of that candle, right? Define accept under? I would say offer. When that red line, Patty, gets underneath 94 and starts offering lower, the price is being put on sale. Good question. Now, market profile people call acceptance 2 half-an-hour periods, which is not acceptable when you're, scalping, right? So now let's see if those of you who are looking for a short, now we've identified a seller here at 97. Watch the next candle. If the next candle stays under 95 and a half, Patty, you can take a little short and put a stop or a buy order at 93 and see if you get hit. If you don't get hit, then you know that there's no supply. So you short 94 and a half, but you got to be quick, right? A little shake, exactly. A little shakeout, right? And those shakeouts bring in buyers, right? If there's enough people short underneath, that shakeout will bring buyers in. You know what happens like on Black Friday sales, Patty? When they lower price, you get all the people pressed up against the door. And as soon as the door opens, they rush in, right? They knock over everybody. So sometimes when you put price on sale, it'll bring in buying. And that's what it did in that big green candle that I got long on the second time. Now let's see what happens. I know there's going to be buying at 90 because that's where the overnight high is, right? So if you're still short, right, if you're short 94 against 95 half, you're looking to cover 92, 91 and a half. You want to front run the overnight high at 90. Okay? So now the short worked. Why? Because we took a whole half an hour to trap people above 95, right? Ah, you find look below and fail trades all day and you end up over trading? Try taking them from one color to another. If you take them from the edge, right? Look below and fail from like purple to gray or from purple down to green back into purple, you'll limit the amount of trades you take. Take them from the edges of the zones, not the middle, not the lines. That'll help. Yeah, it's based off experience. Now, you know, Jiraj, I've screwed up that look above and fail, look below and fail. I've screwed those trades up so many times learning how to do this and teaching myself how to do it. And that's why I keep telling you that you got to put in the reps, right? And it'll happen. At first, it's frustrating, right? You got to fight through the frustration. Just like when you teach people how to box, you put somebody in the ring and they might have read a book on boxing. They might have done the workouts, but you know, the heavy bag doesn't hit back, right? When you hit the heavy bag, when you hit the speed bag, those things don't have arms to hit you back. So the first time you're in a ring and somebody pastes you right in the face, right? And you start to see Tweety birds, right? You don't know how to react. You kind of freeze, right? When somebody hits you in the face, right? Or kicks you in the head if you're kickboxing, right? I do not recommend using a longer time frame, Patty. You're in my coaching class, right? So I reduce the number of setups by trading by the edge. So when you have time, Patty, give me a DM and we'll schedule a one-on-one. We haven't done one for a while. Here, I'm going to DM you. Yeah, we should do a one-on-one. I think you're due. Now see how they're front running that overnight high? Let's see if we can tag that 90. That's what I'm looking for. Stick to the 1 minute chart. The only reason you have trouble with the 1 minute chart is you're not used to it. That's all. It's like anything else. Hey, AZS, how you doing? Whew. Let's see if we can get past the gatekeeper at 96. If we do, your sellers will be at 97 and up here at 98 and a half. Right? This could be another look below and fail. Grabbed 2 at 96, sold 1 at 97 and a quarter. And let's see if it's got legs. If it doesn't, I'm going to have to scratch the second contract. Ugh. Right? Once again, early again. Right? I should have had both of my sell orders here. Lack of discipline. Lack of discipline. Yep. Now let's look for a break of 64.90. I'm good, AZS. How you doing? Good stuff. I don't want to overtrade, so I'll just let them work this chop out. Right? If you do see that seller at 95, you can sell alongside until they stop selling. That's a hard trade, right? Because when they stop selling, a big buy order can come in and just, take you right out. Is it possible to know business ending in one direction? I'm sorry, I don't understand. Is it possible to get the direction from the business? No, don't erase the question. Just ask me in a different way. Oh, you disappeared. It's hard at all-time highs, Kinch, right? What you do is you look for those sellers, and you look for those sellers to keep pushing lower, right? So I shorted one at 94 against the top of these candles, right? And that's the first decent trade I've had this morning, right? And I just covered it at 91. But I screwed up a couple of times in here, right? And that's why I've been trading the micro to get a feel for this new price action, right? That's the first decent trade I had. And I fully expect that. I'm not upset about it because I know that market has changed, I know that we've got a massive gap. Gaps mean change. So if we accept under the open, you'll want to target 85. Okay? Right? So if you're shorting that overnight high area, you'll put your stop at the top of that candle. Right? And remember, everybody and their dog is short. So there are going to be buyers on the way down. Is a look above and fail above the opening print target a gap fill? I mean, it's a possibility. Anything's possible, Green, but it's not a high probability trade. Well, that's not one I would commit capital to. It's not an A+ trade in my book. There's just too much unknown between the opening print and down here to 70. The opening print's at 64.89, right? So I don't have the conviction to look for a 20-point short. You understand? The risk is just too much, especially if we accept above the overnight high, right? If we get back up over the overnight high again and a bunch more short covering comes in, is it possible? Anything is possible, right? But how probable is it? And how much capital do you have to commit to it? Because that's a 20-point trade. Now, if you are a 20-point trader, like say you're trading with a couple of $100,000, right? And you're used to making, 20, 30 points a day, 4 or 5 grand a day. What's the maximum drawdown that you're willing to commit to that trade? Remember, every trade is a business transaction. So before you go into that business transaction, think, how much capital do I want to commit to this transaction? How much time and how much risk am I willing to take if I'm wrong for this transaction? So what is your level of conviction, right? And what can you actually afford, right? A lot of people talk about, risk management and, what's my risk tolerance. But they don't talk about risk capability. Risk capability and risk tolerance are two different things. You might be able to take a $200,000 loss, but if you only got 5 grand in your account, know what I mean? And a lot of retail traders trade like they can take a $200,000 hit and they only have 5 grand to trade with. Right? So you got to be realistic about your risk. Hope that makes sense. I'm not trying to be insulting, I'm just trying to be realistic. Right? Because I don't have a $200,000 risk capability. And even on one of the accounts that I trade for one of my clients, it's a big amount of money. But I would not dare to risk that kind of money of his money. Right? That would be just irresponsible of me. Right? So risk tolerance and risk capability are two completely different things. right? In the market where there is no extended trading session, yeah, I would do that. But I don't. Are you looking to trade a market that doesn't have an extended hours session? I would use the days. Oh, Nifty. Nifty doesn't have an extended hours? Interesting. Did not know that. Yeah, just use the daily levels then. Oh, is the president speaking in an hour? Great, I'll be flat. What the heck is he talking about, Patty? See ya, Hank. Have a good one. Let's see if we could break out of the 93s. Yeah, it's just a hot mess right now. I don't see a clear trade. Oh, crime in Washington? Well, hopefully that won't affect the tape, I hope. So, folks in the coaching class, do you guys need a price action lab? I'll put out a Zoom link at 11. If you show up, you show up. If you don't, I will know. Otherwise, we'll have one on Friday as scheduled. So while it's kind of slow and choppy, folks, a little plug for our trading room, right? If you want to learn how to trade with some practical common sense, learn good business habits, right? If you want to learn how to trade from someone who created order flow and was an insider, who actually created the charts that you trade, come join us at thetradingsyndicate.org. It's less than, a buck a day, and I promise you'll learn more in a month of practical information than you'll learn anywhere else. And that also includes when not to trade. So please come join us. And if you do join the room, message me. I'd love to speak to you. If you're having any issues or trouble, reach out. We're here to help. And we'll also help you pass those evaluations with firms like Apex. Steve's always got some deal going with them. Right? And we keep the cost low, right? Where is VWAP? Good question, Roman. You were asking about it. Maybe we're getting close. Hey, 64.86, 87. Now, Moran, let's see. Let's see. Yeah, sure, Kunj. DM me and we'll set something up. I'm always available to have, sessions with the folks in our room. You just have to show me interest, that's all. Let me know if you're interested. Reach out to me and DM me. Oh, is he speaking with EU leaders? Okay. I'll stay out of trading when he's talking. You never know what he's going to say, right? Basically, Moran, what the shorts are doing is they're front running before VWAP, right? This is all short covering right here. You DM'd me 2 weeks ago? Oh, I'm sorry. I was a bit sick last week, so I missed a lot of stuff. Oh, yeah, I sent you a video, and you never responded. Did you watch the video I sent you? Coming down to VWAP. I never got a response. Check your DM. You never responded. Touch a VWAP. And let's see. The next place bids will be are down here at 64.85. If 64.84 breaks, right, look for responsive buying at 81 if you're short. See how it took inventory an hour to correct? And we haven't even gotten down to the close or a gap fill. Responsive buying off the single prints. And let's see if those sellers step in here at VWAP. If they do, and you're short, you can stay short till 82 and 81. If we accept over VWAP, watch your risk. Exactly, Troy. Right, looking for 82 now. It's not exactly smooth on the way down, but see that short covering, Moran, right here? Once that short covering was done, then the market dropped. Good observation. There's 82. 82 and a quarter. Oh, we hit 82. We still have a ways to go for a gap fill. Gap fills all the way down at 64.70. My real area of interest, if we fill the gap, is 64.61. No problem, Derek. Have a good one. And thank you, folks, for joining me. We'll see you tomorrow. We appreciate you joining us. Have a wonderful trading day. And we'll see you tomorrow. My next session is at 7:30 in the morning UK time. Came right back to the cost basis of the overnight and stopped pretty much to the tick. See you, Colin. I'll give you a call a little bit later. Have a wonderful morning, everyone. Trade safe out there, okay? Thanks for joining me. Bye for now.